You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mish Shedlock, editor of Mish's Global Economic Trend Analysis. Welcome to the show, Mish.
Pleasure to be back on the show, Jim.
The last headline on your blog site, Super Taper Tantrum Ahead, and warning from the IMF. What are they talking about?
Well, they're talking about the idea that the Fed is actually going to hike later this year, and it's going to cause this huge blow-up in the bond market. Well, I think there might be some huge blow-ups, but I'm wondering whether or not there's going to be an untaper tantrum. I just keep looking at report after report after report. They've all been weak. We had 2 more weak reports today. Home building was off to a slow start. Their housing forecast was for about 1 million, and they got about on a seasonally adjusted basis, they got about 9/10 of what they expected, so they were off by 1/10. The Philly Fed today was positive, but new orders stalled. The backlog of orders was negative. Prices are falling. Prices received are falling. So a lot of the industrial production numbers yesterday were bad. The Empire manufacturing numbers yesterday was bad. The string of good news on industrial production snapped at 1. Yesterday was unexpectedly down 0.6%. So just week report after week report after week report, I am now suspecting we're going to have negative GDP for the first quarter.
And Canada's growth as well was 0 in the last quarter.
I'm surprised it's that high, Jim. The numbers that I was looking at before, I thought they were suggesting negative. Did the numbers just come out today? Because if they did, I missed them.
Well, again, they have a habit here of releasing numbers and then 2 months later readjusting them, and it's always a readjustment down.
Mm-hmm. Same thing here. I expected an outright negative number, though, and we'll see. But the U.S. is clearly slowing. Canada's slowing, I believe, in recession. China is slowing. Europe is doing moderately well, but look at why. They trashed the euro, so German exports are going up versus U.S. counterparts. So globally we've traded European weakness for U.S. weakness, and China's just plain out and out bad. So a lot of headwinds here to the global economy, and I think generally when they speak of a global recession, they say anything under 2% growth. I think by that definition, we're certainly going to have a global recession.
Can we believe the numbers that are coming out of China?
No, not really. We never have, never could. We can believe the direction. They were calling for 8, and then 7.5, and then 7, and then 6. But if you look at energy production, if you look at energy uses, if you look at coal usage, if you look at the collapse in iron ore prices, if you look at all kinds of internal factors, it's really very, very difficult to come up with anything more than a few percent at that of actual GDP growth in China, and it wouldn't even surprise me if it was less than that if we had some honest reporting.
India's reporting 7% growth. Are their numbers real?
I don't follow India that much, but I would tend to doubt it. I tend to follow the U.S., Europe, Japan. I occasionally give a glance at India. Certainly they've got a huge, population base there, but in terms of, and a huge, consumer base because of it, but from a manufacturing standpoint, not much to look at yet. From a global currency standpoint, not much interest in India's currency. So I tend not to follow India all that much.
We've had nearly $5.5 billion flee from Greece over the past month. What's going on there? Will they have any money left to repay the debt they owe?
The capital flight out of Greece has slowed down. That's what the latest numbers show. However, if you total it up, it's pretty impressive here. It's 110 billion euros. And if Greece were to exit the Eurozone, that's the amount that European taxpayers would have to come up with. Now, the ECB and the various governments, they've pretty much unloaded their Greek debt. So there's another 300 billion or so in Greek debt, but most of that's in private hands, so that would blow up. But that's got to hurt somebody, and certainly the 110 billion to the ECB were to Greek, European taxpayers were Greece to leave. That's going to have an effect. And look at Spain. Spain is in recovery, allegedly. Its GDP is expected to be 1.5% or something, but it's still sitting there with 22% unemployment. And all of the growth in Greece is going to come at the expense of extremely high unemployment rates. I keep wondering how long Spain is going to be able to take that pressure. We're certainly seeing the rise of political parties in Spain, Podemos, that want Spain to exit the euro. It's really just a matter here of how much pain they can take in Spain, and I believe they've taken all the pain in Greece that Greece can take. I expect Greece will default sometime between now and June.
Does that mean the end of the euro for them?
It most likely does at this point. Last year they were running a current account surplus, and as long as they were doing that, they wouldn't need external funding. But now, a primary account surplus, which is a current account surplus, ignoring interest on debt. And of course, if you default on the debt and you default on interest payments, you can have a positive balance here if you ignore those things. But their tax collections has dropped. Greece is back in recession, and it doesn't look like they're going to have that. So in essence, they need another 40, 50, 60 billion euro bailout, and they ran on a platform of no more bailouts and no more IMF. So even if they get through this latest crisis here now in the next month or so and are able to make the next IMF payment, which I actually highly doubt, it's all going to come to a head sometime between now and June, and I believe they will be forced one way or another out of the Eurozone, most likely by the ECB, when the ECB comes in and puts capital controls on Greece after Greece defaults on the IMF.
We'll have more with Mish Shedlock right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Mish Shedlock, editor of Mish's Global Economic Trend Analysis. What big trend are you seeing right now?
What big trend am I seeing now? I discussed pensions with Gordon Long, and I've talked about that recently on my blog as well. we've seen Illinois pensions, in spite of this massive rally in the stock market, are still only 39% funded. So, of course, what happens when the stock market declines? Actually, the big trend is everyone is still plowing into risky assets as before, on the belief that the Fed can keep this thing levitated forever. I mean, that's essentially the big trend here, is still rising asset prices. We're in one of the biggest bubbles of all times, and people don't even see it. This bubble is as big as the one in 2007, actually, and this bubble is bigger than the one in 2007, and in many ways is bigger than the dot-com bubble in 2000. In 2000, PEs were stretched mainly because people, plowed into companies, technology companies that had no earnings whatsoever on anything. Now we're seeing virtually every asset class in equities and bonds, and especially junk bonds, soaring to the moon. And the Fed has just created this huge bubble in assets. If the Fed does manage to hike, I don't believe they will say so, but I believe they will do it for one reason only, and that's they realize they need to pop the bubble in equity prices.
And what is that ultimately going to lead to?
Well, collapse in the stock market, huge problems for pension plans, huge problems for insurance companies, and possibly a global currency crisis could arise, out of that, as everyone tries to flee all of this, triggering a derivatives blow up of some sort. So I keep waiting for the currency crisis. I'm sure one's on deck, Jim, but I can't tell you when it's going to occur. But I can just look at the monetary madness in Japan, in Europe, and the asset bubble in the United States, and actually globally, just enough to tell you that there is going to be a huge problem, and likely several problems that will all culminate at once.
Another perfect storm.
Another perfect storm, Jim. With that, I got to run.
Well, thanks a lot for taking the time to talk with us.
And my pleasure.
My guest has been Mish Shedlock, editor of Mish's Global Economic Trend Analysis. You're listening to this copyrighted program on HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our YouTube channel is Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.